morning, David. Good morning, House. Thank you for having me. So considering the market reaction, it's only 1%. And you compare it to almost doubling the capital gains tax, that's a little bit of a muted reaction. But it's also possible that the investors are thinking that there's going to be a lot of debate before that is going to be passed on. So it's not necessarily the end of the party just yet.
Okay, and I see among your top calls, which you'll talk about a bit later on, but you're kind of bearish on the dollar against some of these Asian currencies.
Indeed. So my expectation is the dollar is going to be getting its trend from the U.S. 10-year yield, and my expectation is that now, at least for the quarter, I expect the U.S. 10-year yield to fluctuate around 1.6 and 1.8%, because at this point, the outperformance of the U.S. economy is already in the price. So you need something else to trigger for the 10-year yield to move higher beyond 1.8.
Okay, and a big talking point these last, I would say I'd stretch it out to 3 weeks, given the outperformance isn't the price in the U.S. When I look at Asia, you look at PMIs, you look at exports, you look at markets, Taiwan really stands out. It's just on another level. I mean, do we need to start talking about Taiwan within the conversation of, is this economy overheating, I guess?
Not necessarily, because at the end of the day, Taiwan as well as the Korean markets, they are the most exposed to the global reflation story, at least in Asia, because they are really at the heart of the tech story. So it is not surprising that they are outperforming the regional indices. More importantly, the domestic demand in Taiwan has really held up because they had been very successful in containing the COVID in 2020. So they're not coming from a hole that the other economies are trying to crawl out of.
Eugenia, I want to take a look at the Sing dollar. How much upside could we potentially see? I mean, growth is looking pretty good. And what assumptions are you making in terms of monetary policy? Could we see a tightening sooner rather than later, even if it's not anytime soon?
Yes, indeed. So the MAS had already provided forward guidance with respect to their neutral policy last week. So my expectation is that dollar Sing exchange rate could go down to 131 by the end of the year. And it can even happen with the neutral policy maintained as far as October, because the domestic demand is clearly on a continued recovery, and we expect that the MAS, the central bank, would allow the Sing dollar to strengthen from here.
How about the rest of its Asian neighbors, Philippines, Malaysia, Thailand, still trying to contain the virus, far from normalcy? What impact could all of that have on their own currencies?
Indeed. So the domestic demand for most of the other Southeast Asian economies, including India, is clearly deteriorating with the uncontained cases, with the uncontained daily rises in the cases. However, that does not have a one-to-one correspondence with their currencies, because as you can see, with the Philippine peso tends to strengthen whenever your domestic demand is hampered. Whereas for the other currencies, their domestic demand is hampered, thus their currencies are going to be struggling. As for the case of Thailand, their handling of the corona has been quite successful on a relative basis. Even so, unless their borders are really open, which would allow the return of tourism, it would be very hard for the Thai baht to strengthen in the near term.
And I guess just to put everything together here, and I'm going to mention the big news this week, central bank-wise, was the Bank of Canada, and they tilted hawkish. We saw what happened with the Canadian dollar. The reason I bring that up is it's starting to emerge clearly that the story for the recovery is going to be on vastly different paths and rates across these different economies. Is there one specific economy in the Asia-Pacific, Eugenia, that you see surprising us to the upside? We might actually see the central bank also tilt sort of hawkish towards the end of this year?
So in the Asia-Pacific region, I am expecting Australia to maintain its economic recovery, and to date, it has actually been coming in much faster than expected. Although I do not expect the Reserve Bank of Australia to exit its supportive stance, the recovery in its labor market just cannot justify the continued extraordinary supportive policies that it had implemented in 2020. Specifically, I'm looking at the yield curve control in the short end of the curve. I don't think that kind of support is warranted considering the recovery in the labor market. So I'm quite bullish on the Aussie, and I'm expecting the Aussie dollar to rise to 82 cents by the end of the year.